Ladies and gentlemen, good morning to all of you. See, GST has got now vibration, and this vibration need to be there. Yesterday, Rajya Sabha has passed all the 4 bills, CGST, IGST, UTGST and compensation bill without any amendment. So virtually GST going to be a reality from July 1, 2017. So from insurance sector perspective, are we ready? This is the important take for today's seminar. I'm going to touch base important issue pertaining to insurance sector, be it life insurance or general insurance, and will raise open issues for deliberation today and how we are heading for with our preparedness. So request all of you be active participants today, enjoy and post your queries. We would be delighted to respond back to your queries. To start with, the first question comes in everyone's mind, why we need GST? Are we not happy today? If you look at why we need GST, there are 4 important parameters, and I will also club why insurance sector important, why they should look at GST as the biggest indirect tax reform. India is struggling with a multiplicity of taxes today. Around 17 indirect taxes, either levied by central government or levied by state government, going to merge into one basket. This is going to be GST. So just think of 17 indirect taxes compliances are getting merged into one basket, GST, advantage 1. Advantage 2, India is struggling with the cascading of taxes. Look at your sector, VAT paid on goods, and these inputs are being used for the provision of taxable output services. We can't take credit. This is cascading. Now what happened post GST? This cascading will go away, and whatever CGST, SGST paid on intrastate, IGST paid on interstate, credit would be available. To that extent, benefit will come to this sector. Today VAT is cost, CST is a cost, entry tax, entertainment tax, number of other taxes levied are cost. Having said that, third important item, double taxation. I know insurance sector is a service sector, service tax applicable. But there are lot many other transactions where double tax is applicable. Starting with AC restaurant software. There are 59 companies, 53 companies, I was told by Mr. Khaitan in his inaugural remarks. You must be running your business on a software, be it Oracle or SAP or Microsoft, and you must be knowing we end up paying double taxes, service tax and VAT both together on same transaction. A transaction need to be either supply of goods or supply of services. But today we are paying double taxes. On a lighter note, AC restaurant. We pay complete VAT on 10,000 rupees AC restaurant bill, and we pay service tax on 40% of 10,000 rupees. Why double taxes applicable today? Because central taxes are not recognized in state, and state taxes are not recognized in central. But GST is going to provide clarity. A transaction can either be supply of goods or supply of, double taxes will go away. Advantage 3. Advantage 4, which is the foremost advantage for country India. We are saying GST is a one nation, one tax. How come it is possible? Let me tell you. We are in NCR region. Gurgaon is being governed by Haryana VAT provision. Just 10 kilometers away in Delhi, Gurgaon, Haryana VAT provision is not applicable. Delhi is being governed by Delhi VAT provision. Provision which is applicable in Delhi is not applicable in 10 kilometers away in Noida. We got state barrier. We looks like one country within the Union Territories of India. Every state looks like one country. So we are not having India as a national market, common unified market. Of course, from service tax perspective, we have centralized registration, service tax provision applicable across the board. But look at other sector. We have VAT provision applicable. State barrier is there, and India is not national and common unified market. What happened post GST? GST law, which is applicable on floor of Delhi, going to be applicable pan-India. Just one departure. When this revised model GST law came on public domain on 26th of November 2016, it was stated GST law going to be applicable all over India, including Jammu and Kashmir. But this final GST law, they have taken a departure. Now they are saying this is applicable all over India except Jammu and Kashmir. Article 370 going to play important role. But nevertheless, rest of India excluding Jammu and Kashmir, same provision applicable, be it Delhi, be it Kerala, be it Kanyakumari. Registration provision applicable in Delhi is applicable pan-India. That's what I'm saying. That is a realistic term, one nation, one tax. Now we need not require to look at the VAT provision state-wise. We have to look at GST provision which is applicable for registration, payment, raising invoice, filing return would be unified, common for all of us together, be it manufacturer, be it trader, be it a service provider. Advantage. That is realistically one nation, one tax. Hope you get my point. Having said where we are heading for, which model India is looking at? India is looking at dual concurrent GST model. And what is this model? Where both center and state going to levy taxes simultaneously, concurrently on both goods and services. Today you are a service sector, only service tax levied by central government. Post GST, what will happen? We will have two authorities, central and state. Whether it's supply of goods or supply of services, there would be dual authority and dual taxes. Now, how this dual model going to work? Why India has picked up this dual levy? This model is being followed in Brazil and Canada. But why India has looked at dual control, dual levy? It's a federal structure. State want to have their own autonomy. We are moving and improvising, but better and best model could have been national GST model. What is national GST? Only central levying taxes with the revenue sharing with the state. Australia and China. But we can't follow. State want their own autonomy. So I'm not saying dual model is not good. It's a good improvised version over existing indirect taxes. How this dual levy going to work for intrastate or interstate? Let's listen. Intrastate means within state, whether supply of goods or supply of services. Interstate means from one state to another state. If you look at goods supply, intrastate on 100 rupees base value today, central excise applicable and VAT applicable. VAT is calculated inclusive of central excise duty, right? But what happens if you're a VAT dealer, you're not manufacturer, you can't take credit of central excise duty, right? So these are cascading. For service tax credit is available, but if you are purchasing any raw material or inputs or goods, you are paying VAT, you can't take credit. Hit back, cascading. What happened post GST for intrastate or interstate? Let's listen to intrastate first. Intrastate, what GST model says, on supply of 100 rupees, be it goods or services, there would be two taxes leviable, CGST and SGST. CGST central, SGST state. Both the taxes leviable, and both credit would be available in the hands of buyer. And when buyer charging, let's say 100 rupees, he charging 9 rupees CGST, 9 rupees SGST, he will get corresponding credit in respective account. When he is supplying the same goods or services intrastate on 150 rupees, he will again charge 9% CGST, 9% SGST, and he has to pay CGST and SGST on value addition, 50 rupees. Cascading gone. Excise, credit not available, now CGST credit available. VAT credit not available to you, now SGST credit is available to the insurance sector. Advantage. It will impact efficiency in our pricing for the service sector. But when I'm saying so, rate is very important. Rate is very important. Today, government has only announced 4-tier rate for the goods taxability. 5%, 12%, 18%, 28% and 28% with cess. But GST Council has not yet decided what would be GST rate applicable for service taxability. And what is being heard? It is being heard that GST standard rate would be 18% as against 15% today. So there would be 20% hike. Just imagine, insurance sector is two major sectors, life insurance sector and general insurance sector. Under life insurance sector, we got policies like risk with benefit, endowment policies. Their initial first year rate is 3.75%, second year is 1.88%. Otherwise, term insurance, full rate applicable. General insurance, full rate applicable. Just imagine if 15% increase to 18%, what would be the impact on our pricing? And then affordability, like what country require? Country require life insurance and health insurance for all of us together. If this rate is being increased to 18%, impacting pricing, look at whether it would be affordable to all of us together. First take, maybe today's take would be we should submit our representation to the Government of India. And what would be our representation? Though GST standard rate going to be 18%, but insurance sector requires support. And rates should not be more than 12%. It need to be lower rate applicable. And for life insurance, there are certain countries where life insurance is not chargeable to any taxes. Why? To provide social security to the citizen. We can also look at those aspects. And even Honorable Prime Minister is talking about agriculture sector and the population below poverty line. So these taxes plays important role to make it affordable to all of us together. This is the first thing. Now going forward, interstate. How interstate going to be applicable? Today look at from service sector, no problem, service tax applicable, be it intra or inter. But I will discuss the importance of intra and inter. But let's understand what happened today. Today you are charging service tax. So no problem, you are not looking whether your recipient is in Delhi or outside Delhi. You don't look at. But tomorrow you have to look at all these components for chargeability of GST. But let's listen how interstate supply of goods or services going to be taxable under dual GST model. On interstate supply, IGST applicable. IGST is the central levy, sum total of CGST plus SGST. Am I clear? Advantage, if you look at goods taxability, if you are purchasing goods from Delhi to Gurgaon, you don't get credit of central excise. You don't get credit of CST. But now interstate, IGST applicable credit is available. Service tax charged by you to a VAT dealer, no credit in the hands of VAT dealer. But now post GST, service tax charged by, or which is GST charged by, credit would be available in the hands of VAT dealer. Cascading will go away. And interstate, look at goods taxability. Today we are not preferring to buy from one state to another state, state barrier. No credit of central excise duty. Unless you are a manufacturer, no credit of CST. Post GST, IGST applicable and IGST credit is available. So what happened? India become national common unified market. Now no state barrier. We become all truly Indian citizens. So GST law, I'm saying, is a tag word, is going to be Bible, Gita and Quran. Irrespective of any language, religion, race and caste. The provision which is applicable for me in Delhi is going to be applicable for Mamata Dij in West Bengal. She is Bengali, but still the GST law is same for all of us together. Be it Keralite, be it Tamilian, be it Malayali. Does not make difference. GST law going to create this kind of uniformity and India become national common unified market. Now having said, let's look at next impact on you. When a transaction is intrastate or interstate, important, right? I said on intrastate, what is applicable? CGST and IGST. Interstate, what is applicable?
IGST.
The thumb rule would be, if location of supplier and place of supply is in same state, then this transaction would be called intrastate. What is interstate? Location of supplier and place of supply is in different state. You have to identify two parameters. First, location of yours, location of supplier. And second parameter, place of supply. Let me do two case study with all of you. First case study. Today you may have 29 offices in 29 states. You may have taken centralized service tax registration. You are only paying service tax from Delhi location because you are centralized registered. And you are filing only 2 half-yearly return, am I right? Post GST, what registration provision says. GST is now going to be a destination-based consumption tax, right? It will accrue to a state where ultimately goods and services are consumed. But for registration, you have to take registration in the state where from you're supplying goods or supplying services. Are you getting this point? GST is a destination-based consumption tax. It will accrue to a state where ultimately it is going to be consumed. But for registration, you have to take registration from the origin state. If you're supplying services from Delhi to Gurgaon, GST will accrue to Haryana. But you have to take registration in Delhi. So first important aspect. Now when you take registration, next question will come. Today you have 29 offices in 29 states, centralized registration. What happened post GST? We have to move from centralized to decentralized. We have to take 29 registration in 29 states as against one registration. Because if you're supplying from those locations, so maybe business aspect, you have to sit down and you have to look at how many locations you want to carry forward post GST. Because this is not only registration. After registration, you have to make payment of GST and file GST return. And you know how many return is being prescribed? 3 minimum return per month per registration. Outward supply by 10th of next month, inward supply by 15th of next month, and consolidated by 28th of next month. These 3 return per month must, 3 into 12, 36, 1 annual return 37, into 29 registration. Then you may be questioning whether it's a easing business or not. But let me tell you, we are moving from paper taxation to paperless taxation. Everything going to be automized. Only a supplier has to upload the invoice. Once invoice is being uploaded on GST and network, everything starts working. You need not require to do anything. If I'm supplying goods or supplying services to you, I have to raise my invoice, upload on GST and network, and that invoice would be my outward supply, which auto-populated for you as an inward supply. Purchase, auto-populated through GST and network. So we are moving from paper to paperless taxation. So IT is going to play a very important role. So 37 return per registration, which I'm referring to, it is going to be driven by IT sector. But I said these are the thumb rule. Now take one thumb rule more. Second is the place of supply. Place of supply. And let me throw a question to you. Let's say you're an insurance company in Delhi, and I'm also your customer in Delhi. But your property is located in Maharashtra and you're giving me fire insurance policy against my property. Immovable property is located in Maharashtra. But we both are in Delhi. Please tell me whether this transaction would be intrastate or interstate. Intrastate, because you are finding we both are located in, even though property located in Maharashtra, ultimately services are being consumed in. Why Maharashtra will keep mum? They will stand up and say, boss, your property is located in Maharashtra. If at all GST revenue should come, it should come to us only. But again, for that reason, I created this example to you. Now for determining place of supply, specific provision is being prescribed under place of supply provision. You have to go back and check. For insurance services, what they have said, if it is B2B transaction, 1 tin to another tin, 1 tin to another tin. If you are registered and I am registered, then you're providing services B2B. In that case, place of supply would be, shall be, location of recipient, irrespective of fact where the underlying asset is located. So what happened? You are a supplier, I am recipient, we both are in Delhi. This transaction would be intrastate, and you have to charge CGST and SGST. CGST and SGST. But let's say you made a mistake. Let's assume you made a mistake. You made a mistake and you have treated this transaction as interstate, and in that case you must have charged IGST, am I right? So after 2 years, department comes and say, Mr. Jain, you have taken wrong call. It was intrastate transaction, which you treated interstate. You have charged IGST, but you should have charged CGST and SGST. Then they will say deposit CGST and SGST, but you have already deposited IGST. Question will come, can you adjust the payment of IGST towards the payment of CGST and SGST after 2 years? Can you adjust? You can't do that. You can't do that. So you have to deposit CGST and SGST and go for refund of IGST. And we all know refund. We all know refund component. But why I'm saying so? Why I'm creating this importance? Now look at the model. Now place of supply provision further says, in case it is B2C transaction, which happens, rightly picked up by Mr. Sethi that I'm flying for a trip outside India. On 30th June, I have to take policy. My travel start only after 1st July. So prior to 1st July, service tax applicable, then service provider must have charged service tax. But actual services are post-GST regime. What happened to that? I'm only creating some of the important line item for your preparation. But why I'm creating, I will tell you. Now when I'm discussing these components, in case of B2C transaction, place of supply provision says, place of supply shall be address of the recipient in your books of accounts. Address of recipient in your books of accounts. Just imagine now, today we may issue a policy. Anyone is making payment. But tomorrow you have to have all details readily available. If I'm B2B transaction and I want to avail credit, in that case compulsory I have to quote my GST number to you. Then only it would be B2B transaction. Then only I can avail credit. It's not like that your purchase invoice, your supply invoice will come and I will take the credit. Unless this is properly, that tax invoice is properly raised with specified particulars. And those particulars are then uploaded through tax invoice. And that tax invoice would be auto-populated in my books of accounts being recipient to avail credit. So those compliances become important post-GST. When I'm saying so, I said place of supply and connected also. Let me take it little further. GST input tax credit. See, we all are looking for GST to availing seamless flow of credit, right? There should be seamless flow. Whatever taxes paid on purchase should be available, and these taxes should be utilized for payment of my output liability. Am I right? But do we have such kind of provision in GST input tax credit? Today, let's say you are raising service tax. I'm a company, LG Electronics. I have taken health insurance policy for my all employees. You're charging service tax. Being LG, can I take credit? I can't take credit because input service definition bar. I can't take credit. We have represented this issue number of times. Why? When this provision got, from 1st April 2011, they have removed activities relating to business and put a condition, input service credit is not available if it's pertaining to employee personally consumed. But in actual reality, when I'm taking policy for my employee consent, it is not actually consumed. It is meant for business. Under Income Tax Act, we get deduction of those health insurance. But under indirect tax, it is termed as personally consumed. Contradict. What happened post-GST? Are we going to get relief? Let me tell you, laudable one. Laudable one. So I've said some critics part. Let me say some positive part as well. Now the definition of input services and capital goods is really made to open up. Laudable one, wider one. What they say, input and input services used or intended to be used in the course of furtherance of business. So in the course of furtherance of business is too bigger a term. So whatever input and input services or capital goods procured, which is used or intended to be used in the course of furtherance of business, credit would be available, good, advantageous. But alongside they have given GST input tax credit negative list. What is negative list? First, to insurance sector. Let's say you want this office to be constructed for you. You're a company. And without office, we can't provide service, or neither we can manufacture goods. I'm a contractor, I'm charging service tax today. Post GST, I'm going to charge GST. First question will come, can you take credit of GST which is charge on construction of your office premises, meant for provision of taxable output services. Can you take credit? Yes or no? No? Today you can't take and tomorrow again you can't take. Are we really heading for? Why we are bringing the same past legacy, post-GST, first part, you can't take credit. Cascading continues to that extent. Continues to that extent. Second, like life insurance and health insurance taken by the company for employee concern. Today credit is not available because restriction personally consumed. Post-GST, at least a laudable one. Provision says credit would be available provided it is statutorily required. Provided it is statutorily required. First part. Second part, insurance and reinsurance. So let's say I'm undertaking a subcontract and I'm charging GST and being a main insurance payer, can you take credit? Revised model GST law was not having that provision, but final model GST law says, yes, credit would be available. Advantage. Credit would be available. So this part, but in GST input tax credit provision, there are two important parameters which we need to look into. Now, when you can avail credit, you know service tax applicable on advance money given, right? GST provision is also saying that GST applicable on advance money. Let's say you're paying me 10 lakh rupees for the provision of services. Service tax applicable today, post GST, GST applicable, but this provision is replicated for even goods supply. Even advance money given for supply of goods today, no excise, no VAT, but post GST advance money given either for supply of goods or supply of services, GST applicable. Of course applicable, so I would be charging GST. But this question goes back to you, whether credit would be available to you unless you receive the goods and services. You can't avail. So what happened? We have deposited the GST with the government authority, but you will take credit only when actually you receive the goods and services. So looks like little government is enriched to that time period. First part. Second part, can't they have same provision? Less credit would be available in the hands of recipient. If contract get cancelled, corresponding credit note or refund voucher is being created. The provision is being provided, refund voucher, in final model GST law, but corresponding credit provision is not corrected at all. Second, there would be matching and mismatching, and one component which you would be little worried of, we all are worried of. Let's say I'm a supplier of goods or services to you. I have charged GST, you have paid GST to me. I have not deposited to the government exchequer for any XYZ region. Can you take credit? Because it is not, he's simply saying it is not recorded, but who is at fault? Supplier, not you, being recipient. You are not at fault. Who is at fault? Supplier only. If at all there would be penalty and anyone need to be penalized, supplier who has not deposited, right? Now in this case, look at the volume. Now at the month end, you have to sit down with your database and check to whom you have paid and he has not deposited. That you would be saying, sir, it will be coming through auto return. Because unless I pay the GST liability along with my return would be invalid return. So invalid return, deficiency memo will come. Deficiency memo will come to both of us together. So you have to restrict your credit. You should not take credit. What is our suggestion from PSG Chamber of Commerce? Suggestion given to the government, sir. When government will come to know that Bimal Jain has not deposited that money, deficiency memo is being issued, put a escrow account. Allow this credit in the hands of recipient. And you penalize Bimal Jain within a period of 1 month or 2 months. You know that escrow account. So I'm just responding back to you. You should not be given penultimate operation inconvenience. Look at, there are so many companies having more than 10,000, 20,000 vendors. So this is what we have given suggestion, but final model GST law is saying nothing, so we have to prepare ourselves. Coming to time of supply, I said advance is chargeable to service tax, continue to be GST provision. Though supply going to be a taxable event post GST, but point of taxation become important. Advance is chargeable. Now when I'm discussing this provision, let me touch base one more case study with all of you. Time of supply is a point of taxation for GST chargeability, but what each irony, open issues. You give insurance claim after claim is being certified, whether insurance claim is an actionable claim, first of all. In legal terms, insurance claim is an actionable claim. Now, when you go to the definition of goods and services, goods definition says every kind of movable property other than money and securities, but includes actionable claim. So this actionable claim, looking from your industry perspective, only service. I will again. See, insurance claim per se is actionable claim. Am I right in saying so? Please say louder, yes, you agree with me. Actionable claim. Now, whether actionable claim is chargeable to service tax today? No, because excluded from service definition. Post GST, there are three important parameters. GST applicable on supply of goods or, so there has to be supply of goods or supply of. So please tell me, this insurance claim is an actionable claim. So we have to really run through the definition of goods and services. So what is the definition of goods in the final model GST law? Goods definition is every kind of movable property other than money and securities, but includes actionable claim. So this actionable claim becomes goods, which can't be the case. But what happened, irony goes further. Schedule 3, entry 6 got added. Schedule 3, entry 6 got added, and they say actionable claim is neither a supply of goods nor supply of services. So some litigation from goods definition perspective, some clarity from entry 6, schedule 3 perspective. We are heading for biggest indirect tax reform since independence. What we would be looking for, law should be very simple, in clarified manner. Should not have any ambiguity. But I'm only picking up, because theme presentation I cannot extend in technical part, but just I'm raising those concerns. Coming to the last component, transition and our preparedness. I said on 29th of June you would be issuing policy, and which is going to be for the period post 1st July. What would be our preparedness? How these transactions would be covered. Second, you are availing Sandwich credit today, Sandwich credit of excise duty or service tax, which would be standing in your books of accounts on day of July 1, 2017. So Sandwich becomes CGST. What happened for the VAT paid on input lying in a stock on appointed date? Can you take credit? Provisions are there, but you have to really go back to those provisions and look at those provisions for your advantage and benefit. So transition going to play important. There may be contract, long-term contract. You entered with a company. You said 15% applicable, all inclusive. Because I'm a government PSU, I don't want to do anything. So you enter into a contract prior to July 1, 2017, all inclusive. Let's assume that this 15% becomes 18% for general insurance. Who is going to be a 3% extra incremental hit? Do you have corresponding clause in the existing contract? First part. Second part, if you are under negotiation for contract with existing client or proposed client, pre-GST scenario, include such clauses. Make sure that any incremental effect of GST rate should not fall back on your pricing, and it should not sail out from your pocket. Those preparations are very important. And that may create huge chunk of cash flow issue for you, because whenever you enter into a contract, you normally enter into crores and crores. So those aspects going to play a very important role. Coming to the last and foremost component, what Insurance Committee and IDT Committee of PSG Chamber of Commerce can do for all of us together here. This Insurance Committee is organizing GST impact, and from Indirect Tax Committee, I'm highlighting impact of GST on insurance sector. My only submission to each one of you would be that after this first inaugural session, there would be technical deliberation by all experts from your industry, be it broker association, be it third party, be it insurance brokerage firm, be it insurance surveyor. Now they are all dealing into insurance, but they are not governed by insurance services. They are governed by normal place of supply provision, normal provision. In that case, B2B location of recipient. So you have to really understand these are the services pertaining to insurance, but only life insurance and general insurance given by insurance company to the customer, that is the insurance. Otherwise, these are the services given by service provider. So there would be different way to look at place of supply when you're procuring services and when you're giving services to your customer. So these are the aspects going to be important. I'm only telling each one of you what both the committee can do for all of us together. After this today's seminar, do not sit down. Please raise your voice and concern. Government has put 10 GST rules on public domain. Government has formed one working committee chaired by Sri Upendra Gupta ji, banking, finance and insurance sector. So any pertinent issue from insurance sector which you want to highlight and apprise and raise as a representation, kindly jot down those points. And this is the high time we should go back by 10th of April and be promised as a PSG Chamber of Commerce that we'll take your input and suggestion and write back to the concerned group, working group, formed by Government GST Council. Today we are looking for why can't we can have centralized registration, right? This is a pertinent point we are raising. There may be lot many other points which would be coming out from your deliberation today. So kindly summarize those points. My request to Mr. Sethi would be, he can jot down those points, and being PSG Chamber of Commerce, we both will take forward to the concerned working group committee, and you can also come back with your suggestion on draft rules which is there on public domain for registration, payment, invoice, return, valuation, composition, transition. Please come back with your suggestion. So I do not want to take much of the time. I've taken my extended 5 minutes time. With this, I sum up. Thank you. Thank you very much.